Hey, what's up everybody? Casey Shine here. Today we're going to talk about the looming 2020 recession you've probably heard about by now, right? I mean, everybody's talking about it. I don't think I can even go a week without hearing about it. I'm a part of some Facebook investor groups, and there's investors in there saying, I can't wait for the next recession so I could buy houses on the cheap. And if you're just a regular buyer, maybe you're ready to buy now, but you're thinking, I'll wait a little bit for prices to go down and then I'll buy. Here's the thing. Will you be able to buy houses on the cheap? What could we expect in this upcoming recession? Let me ask you this. What do you think about when you hear the word recession? Good chance you think about the last one we just went through, the 2008 Great Recession caused by the housing crisis. But what is the actual definition of a recession? It is 2 consecutive quarters of economic slowdown. I'm going to say that again. 2 consecutive quarters of economic slowdown. That's it. That's what a recession is. So let's make one thing very clear. Recession does not mean housing crisis. Recession does not even mean market crash. Those are just extreme examples of a recession. A normal recession is actually a necessary ingredient for a healthy economy. The economy needs to let off some steam so things don't boil over and inflation runs rampant and goes out of control. Think of it like racing around a track. Should you go just as fast around the turns as you do on a straightaway? No, you'd fly right off the track. You actually have to decelerate around the turns so you could still win the race and not fly off the track. The economy is the same way. Yes, there may be a deceleration, but not a depreciation. What's the difference? A deceleration means you let your foot off the gas, but you're still going forward. As a matter of fact, did you know in the last 5 recessions we had in this country, only 2 resulted in a drop in housing prices? And one of those drops was only a 1.9% drop. The other was the big 2008 20% drop, which was caused by the housing crisis. In the other 3 recessions, housing prices actually still went up. In some cases, as high as 6%, which is double the normal rate. Did you know that all the experts are saying there's about 10 to 12 reasons the next recession will actually begin? The top 3 tend to be trade policy, stock market correction, and a geopolitical crisis. Housing actually comes in near the bottom of the list, like at number 9 or so. Why don't we do this? Let's talk about what actually caused the '08 recession and see if the market conditions and key indicators are similar. 2 main reasons the last recession took place: recklessly draining equity in one's home and risky subprime mortgage lending. Let's talk about the first one. Homeowners were treating their houses like ATM machines and pulling out all the equity to buy liabilities. Sometimes they might have used it to buy 2 or 3 houses with such little down that when housing prices fell, they were now underwater, couldn't afford the mortgage payments, and they couldn't refinance the home. There was $824 billion of that leaving zero equity. So where are we now? According to Urban Land Institute and Atom Data Solutions, get this. Did you know over 53% of houses in the nation have over 50% equity? And 37.1% don't even have a mortgage their own free and clear. When it comes to tappable equity, which is the amount of equity you could pull out of your house and still leave a 20% cushion, it is at an all-time high, about 6.3 trillion as of the second quarter of this year. This means homeowners are getting smarter. We're not pulling all the equity out of our homes like we were before the big recession. It's the complete reversal of what the market conditions were before the big '08 crash. Might also help to know that according to the Mortgage Bankers Association, delinquency rates and foreclosure inventory is at one of its lowest rates in 25 years. Now let's talk about the lending issue. We're going to look at the Housing Credit Availability Index. What is this? This index measures the percentage of homes likely to default. A lower percentage means lenders are not willing to tolerate defaults and they're going to make less risky loans and have tighter lending standards. Check this out. Back in '06 and '07, that number was somewhere around 17%, 16-17%. Today, we're not even at 6%. We're hovering right above 5%. Now let's look at the Mortgage Bankers Association Mortgage Credit Availability Index. Normal runs around 375 to 450. Before the crash, look at this, it was in the 8 and 900s. After the crash, it was in the 100s. And now we're getting in the high 100s, closer to the 200s. This is good news. This means lenders are not making the same risky loans that they were making before. It's clear that we're nowhere near close to resembling what the market conditions were like before the 2008 crash. Let's talk about where we're headed. According to 100 of the most trusted real estate economists and housing experts, 94 said they expect housing appreciation to continue. And there's a couple reasons for that. Number one, interest rates are expected to remain low. Number two, buyer demand is high and there's still a little bit of a shortage of inventory. Supply and demand. When you have a shortage of inventory but demand is strong, prices tend to stay up. A lot of sources expect home price appreciation to continue over the next 3 years. So you'll notice their predictions range anywhere from 2.5% to as high as 4.1%. Now that is not as much growth as what we experienced in the last year, hence the deceleration, but not depreciation. So will there be a 2020 recession? We don't have a crystal ball. More than likely there will be one sometime soon, but if you are hoping to wait until housing prices drop before you buy a house or invest into real estate, you'll probably be waiting a lot longer than you want to according to all the data. But what I can tell you, there is more than likely going to be a lot of unrest, as it'll probably be one of the most heated political climates in this upcoming election year. Now, if you know someone that's talked about the 2020 recession, make sure to tag them in this video, send it to them, share it. We need to make sure people are fully educated on the actual data and not just going based off of hearsay. I hope this provides some level of comfort. I do look forward to serving you in your real estate needs, whether you want to buy, sell, or invest in real estate. Make sure to like and subscribe, click on the bell icon for notifications, and I will see you guys at the next video.